Investors waiting on data, some economic data this morning. We've got earnings coming out, a speech from Janet Yellen later this week. On the earnings front, we already heard from Toll Brothers, the home builder, reporting better than expected revenues, a sign of steady growth in the housing market. Michael, as I catch my bracelet falling off me this morning, what's your take on the housing market right now? Because this is a big piece of housing data today and tomorrow as well.
Yeah, we have new home sales. We just had Toll Brothers come out. On the surface, Toll Brothers looks really nice, but they are lowering some margins, and they're blaming mix of delivery on that. So we'll see if that's a lot of noise or some excuse for something else going on, because I do think something else is going on. We're taking housing strength for granted here. And, you look at some of the other economic data, and I want to focus on non-farm productivity once again and say this is a problem, because that being weak, all these 3 or 4 quarters in a row now, it's going to affect corporate profitability. That means that wages are going to have trouble rising. That means that disposable income is going to have trouble, and that means that retail sales and eventually housing can get hit. Maybe some of that's an adjustment in the jobs market, where we're seeing, maybe we're hitting a wall here where it's a structural issue, not an economic issue, and we're going to have this problem where housing suddenly hits a wall. I'm not looking for it to crash. I'm not looking for a debacle here, but we're taking it for granted. Maybe it's in for a bit of a nosebleed here.
I want to know what you think about, there's a front page story in the Wall Street Journal today that the extremely low level of volatility suggests to some that a market storm is brewing out there. And I'll quote this. In the past 30 days, we've had the least amount of volatility of any 30-day period in more than 2 decades. So it's the lowest level of volatility in the last 20 years. But what does it mean? Is it that the Federal Reserve pulls the trigger and people aren't expecting it? Now, that would be that the economy is healthy, but is it something else?
Over the weekend, we heard from Stanley Fischer, and Stanley Fischer really pointed out how the economy, in his view, is looking good. He pointed out how, we're almost to our goals, which implies we're ready to raise rates. Now, the issue here is that everyone else has been listening to Janet Yellen, and after what happened earlier this year in reaction to the Fed hike in December, there's thought like, oh, it doesn't matter what these guys say. Forget Dudley, forget Lockhart. Janet's going to come out Friday morning, and she's going to sound this note of caution. She's not going to guide to a rate hike, or 2 this year, like these guys are doing right now. Last year, she did that, and then she was forced. She was painted into a corner. Right. She did it herself, and they had her rates in December. And talking to a lot of Fed insiders, they said, you know what? She's become a lot more passive-aggressive, is the term I've heard used.
Let me talk to you about the complacency in the market, and you'll enjoy this question. I had this conversation with Stuart Varney yesterday on Varney and Company. Whether or not the market, looking at the S&P 500 right now, and enjoying these highs, but sort of sitting there, has the market priced in the next president?
I feel like the market right now is actually, they like Hillary, because Hillary's the devil they know, as opposed to the devil they don't know, Donald Trump.
So there's some certainty priced into the market that he'll win the election.
I've heard that from everyone that I've talked to.
Because it's like, okay, we're still with the cronyism, we're still with the nepotism. It's a system we know. She's saying, look at me, I'm like Bernie, I'm a socialist. No, you're not. You hang out in the Hamptons, you have big fundraisers, and believe me, you're big.
So let me pose it this way. So if Donald Trump catches his stride and there's some movement there, and he's able to narrow the margin between him and Hillary Clinton, you would see some movement in the market?
You might see some movement in the market, but Donald catching his stride, as you say, how does he catch his stride? Does he get more populist? Does he get more protectionist? That would be bad for markets.
Well, by the way, let me pose it this way. Does he catch his stride if the stock market tanks? Because, again,
actually, yes.
The current market is a reflection of stable economy and President Obama's policies, potentially, to some. But if it tanks, does that hurt Hillary and help him? Absolutely. I worry 100%. About a 1.5% yield on the 10-year Treasury, because that looks like disaster.
Well, that's not going higher anytime soon.
Well, so then it's not disaster.
So tying a little bit of this together, we're talking about the market, but the average American doesn't always vote on the market. You brought up something a little while ago, and I had a talk with some of the members of the Home Builders Association in Miami. Sure. Literally 24 hours ago, give or take. And when you look at earnings, when you look at income, when you look at wages that don't rise, those are people who need to have an earnings track to go to a bank for a mortgage, which affects banking. So if you can't get mortgages, you can't buy homes, then you depress the housing market, because you can't demonstrate a track of 5 to 7 years of rising earnings or consistent earnings to qualify for a good mortgage. I want to
add to something, though, that people did vote on the market in 2008 big time, because the bottom fell out of it in September of that year.
Right, but this brings me to the question of, how do those people then survive this? How do they look at this?
Just like the jobs market has structural issues, the housing market has structural issues. The regulators have just put the clamp down on the banks and lenders and potential homeowners, and they've really stifled that.
All right, we got to
leave it there. That is going to be a problem. You're right, David.
All right, coming